the shimmering skyline of Singapore, home to ASEAN's financial hub and one of the most expensive cities in the world. Singapore is a place where private enterprise meets money.
Frankly, a large part of the ASEAN story is driven by private enterprise. People sometimes say, ASEAN grows at night when the governments are asleep.
Singaporean banks arrange for up to 60% of all project-related finance in ASEAN.
The private sector wants something clearly, but from the public sector viewpoint and from a country viewpoint, you want certain things for your people, so you must make sure that there is that right match.
If we can combine the two, both public sector engagement and private, then you start to harness the kind of balance sheets necessary to make these projects happen.
Striking a balance on infrastructure is one of the great challenges confronting ASEAN, the next generation. Hello, I'm Haslinda Amin in Singapore, a country of just under 6 million people, accounting for less than 1% of ASEAN's population, but about 12% of its combined GDP. Singapore is a financial and infrastructure hub of Southeast Asia. Nowhere else in the region is there anything quite like Singapore. A small island connected to the world by the region's biggest airport and to global trade by the world's second biggest container port, a smart city with highly advanced financial markets, education and expertise.
The truth is ASEAN has countries in Indochina who are small and relatively less developed. And on the other end of the spectrum, you have countries like Singapore who are first world countries. So they're two completely different parts of the spectrum. And to think of a single prism and say this is one market or one set of buyer behavior or one set of opportunity is not obvious. When we talk to investors around the world and ask them would they invest in ASEAN, the real response is, my decision to invest in Indochina would be very different from my decision to invest in Thailand, would be different from my decision to invest in Singapore. This is just the reality.
DBS is Southeast Asia's biggest bank. More than half of its business is done in Singapore, with half of its revenue coming from institutional banking.
Frankly, a large part of the ASEAN story is driven by private enterprise. People sometimes say, ASEAN grows at night when the governments are asleep. And that's, I think, for my money, the private sector will be at the forefront of a large part of the integration. It's the businesses which are going and beginning to collaborate across borders, and it's the consumer who's beginning to vote with his or her feet. So I think it will be a story driven by the private sector and by the individuals, and will take the government sector and the public sector along, so to a large extent.
I think most governments have the same goal. They want to make their population more happy, and to do this they need the right infrastructure. So of course there's different countries, different approaches. Some countries are depending a lot on the private sector. Some others are more depending on their state-owned enterprises.
I'm very much in favor of PPP structures. We have bidded in PPP investment opportunities in the Philippines, and I'm a great believer that private sector engagement, particularly with the balance sheets of private companies now growing, becoming stronger in emerging markets like ours, there is an accountability and a seriousness of intent that comes with the private sector engagement in traditionally public-funded projects.
The key thing is to look at it from the eyes of private sector. They won't mobilize their capital unless they think it's financially viable. They're going to get a decent rate of return on it. And once you look at it through that lens, then you have to understand that it needs to be structured properly, and also the framework and the regulations, the investment environment is key.
The Asian Development Bank estimates ASEAN needs to spend $3.1 trillion over the next 10 years to meet its infrastructure needs. Singapore has set up what's effectively a one-stop shop called Infrastructure Asia.
Capacity building in countries is also important, because if there is a project and there is a proposal for how to structure it, The civil servants or the people within the country who are assessing the project must have the capability and the ability to assess it well, because it's not just about having the project right. You also want returns for your people. You want employment, you want capability transfer, know-how transfer, and of course you want the benefits that come from the project.
You obviously have to have a collaboration between the two, because the public sector and public policy obviously has to be informed around, and by the not just from a policy standpoint, but from an infrastructure standpoint. So I think the public sector has a role to play. If you want to build engines or payment rails, I think the public sector has a role to play. If you want to create policies around capital markets harmonization, the public sector has a role to play. So I think this participation is required, but I do think in many cases the private sector will take the lead.
I think Singapore is the role model for a lot of countries within ASEAN, perhaps not only in ASEAN, but also to the rest of the world in terms of the forward-looking and making sure that the public sector's policy is truly in line with the trend within the private and the world economy where it's going.
Siam Cement Group is one of Thailand's biggest conglomerates, an infrastructure company that's been doing business with countries in what is now ASEAN for more than 100 years. From the window of its Bangkok headquarters, you can see the main station that will connect fast trains from Singapore all the way to China.
Thailand is doing a lot of the investment in the infrastructure. I can see that countries like Vietnam, of course, Indonesia, doing a lot of investment in the infrastructure. What we're seeing is that there's also the trend trying to link the infrastructure between the countries in ASEAN with China. So I think the expectation is that the next 10 years, the storyline in terms of the investment, at least from the government standpoint, will be on the infrastructure.
With a rising middle class, with growth, rapid growth, countries are wanting to build cities, small cities, big cities. They need the overall layout and plans for the cities, how to put it all together. Waste, sanitation, water, telecoms, electrification. These are some of the key ones that we have encountered in our conversations with the countries around Singapore.
If we can combine the two, both public sector engagement and private, then you start to harness the kind of balance sheets necessary to make these projects happen. Most Asian countries are quite a few years behind where they should be on the infrastructure side. That's come from, of course, a very positive thing, the tremendous growth that's taken place. But urbanization, the massive urbanization that's taken place in Manila, in Jakarta, in Bangkok, the big Asian cities, have really led to just a dearth of the kind of forward-looking infrastructure that's needed.
I think you really need a very tailored approach for every country. You've got Singapore, where we're sitting today, which is of course extremely developed. Totally different challenges and opportunities compared to Myanmar or Laos or Cambodia. So what we've done, we really adapted our approach and our strategy for each of these countries, looking at what they need to develop and making sure that we bring the right solutions.
General Electric installed the first light bulb here in the Philippines 130 years ago. Up next, finding the right kind of power to sustain ASEAN the next generation.
You've got 65 million people, so about 10% that don't have access to electricity. Some countries have an electrification rate of 30%.
Within ASEAN, there is a shift, not just towards connectivity and inclusion, but also towards sustainability. In a region where coal is king, energy demand has grown by more than 60% over the past 15 years.
We've got 65 million people, so about 10% that don't have access to electricity. Some countries have an electrification rate of 30%, while of course Singapore is 100%. So power generation is definitely the key piece that needs to be grown. We are focusing on that market. We have the advantage that we have a full portfolio. We have all the renewable technologies, wind, solar, also energy storage now, but of course also the thermal technologies in gas and even coal. So again, every country has specific situation. They have specific resources. Some have no resources, so they need to import. And we really need to look at customized solutions for each of them.
For countries in the region to reach their potential, the demand for power needs to be met.
Yes.
What are the challenges in meeting that demand?
The challenge now, from what I see, is power has really come from very traditional fossil-based fuels in the past, and issues of climate change and sustainability have become big now, and rightly so in Southeast Asia. How to balance those energy needs on one hand with a higher cry for sustainable solutions on the other is the challenge. We're lucky that the price differential and the cost effectiveness of renewable energy has begun to come down tremendously in the last 5 years. And there's an opportunity to start taking up the percentage of renewable energy in the energy equation.
The Ayala Group is the oldest and one of the biggest conglomerates in the Philippines. Its energy arm is working on renewable projects worth around $1 billion in the Philippines, Indonesia, and Vietnam. And as a bloc, ASEAN has set a target for renewables to make up 23% of the power mix by 2025.
Most governments have become far more enlightened. Certainly in the Philippines, there's a big move towards renewables now. The challenge for us in the private sector is to start adjusting our portfolios and start participating in those areas. That's the challenge, I think, really addressing energy needs, but in a renewable way. And that's the challenge I think governments face and private sector groups face.
We've always had a view that you need to have a balanced outlook on the whole agenda of sustainability. Climate change is a big issue. It will perhaps be the biggest issue in the next 10, 15 years. But it's like everything, a nuanced issue. One extreme view would be to say, let's stop everything to do with fossil fuel energy today. The reality is, all over East Asia, there's massive requirement for energy over the next 10, 15 years. And the reality is today, there are no alternatives to fossil fuel.
We have the likes of DBS and the AIIB saying that they will not lend unless a project is totally green and sustainable. But is it realistic in a region that's basically looking for cheap source of power, which is coal, and coal remains king?
Yeah, I think the world is doing the right thing, and financial institutions are doing the right thing, moving the equation towards a renewable space. And we ourselves in our own portfolio have set a goal of having 50%, I guess, of our energy production in our own portfolio to be renewable in the long term. I do believe there's always a balance, Haslinda. I'm not an extremist in my views. I think we should have a direction towards renewables. But there are cases, depending on the energy needs, base load and the like, where fossil-based solutions are still the most efficient.
You've got to figure how do you continue to support today's generational needs, while at the same time recognizing that you can't keep going down this path because this will create a really dark future. So we try to balance the two, and so we say, we will figure out how we can start calibrating down our thermal energy financing. Obviously, banks have an important role to play. And at the same time, we've got to give people an alternative. So we've been stepping up our renewable financing. We've been doing a lot more solar, we're doing a lot more wind, we're doing a lot more biofuel, biomass, to be able to help finance the alternatives.
For the US giant General Electric, Southeast Asia represents a massive growth opportunity. Its annual revenue from the region has doubled to $7 billion in 8 years. Across the region, it employs 10,000 people.
I think the main growth opportunity for the future is having these countries work even closer together. I was in Laos last week. And Laos in the north is generating a lot of electricity that is exported to Vietnam and Thailand, while in the south they are importing from Vietnam and Thailand. So from an energy perspective, the grid system is a key to have the electricity at the right place. And I think that's where the region could do better in generating more relationships between the countries in terms of the physical infrastructure.
But what's key is inclusive growth, inclusive development. For countries like Indonesia, for instance, where they have 17,000 islands, a vast archipelago, what do you bring to the table to help bridge the differences?
So I think in Indonesia, it's an interesting case. Indonesia needs both the big power generation plants on Java or Sumatra, the densely populated areas, And then we have got smaller systems, more gas engine solutions that we bring to the remote areas. And we recently actually did bring a lot of electricity to remote islands by bringing these mostly standalone solution, trailer mounted, so very easy to install. And that's been a great achievement, of course, on the side of the Indonesian government, to bring power to places where there was no power before.
Almost every country has an infrastructure plan that ranges from $100 billion to $300 billion. Yet here we are still talking about the dearth of infrastructure in Southeast Asia. Why is that the case? If there's one action that needs to be taken, what would that be?
The growth has been so tremendous that everybody's generally playing catch up. And you need that infrastructure to basically prime and make that growth sustainable for the long term. So I'm very much in favor of planning ahead and overweighting infrastructure, particularly in major economic centers. And that would be one way to keep that economic growth going. But I think governments have to deal with a lot of balancing, I guess, of political issues, social issues, and the like. And I can understand why it doesn't always happen perfectly.
Up next, from Hanoi to Ho Chi Minh, how Vietnam is embracing change.
The real value of fintech is it reduces costs of everything. Frankly, that's the advantage of technology. Technology is fundamentally deflationary. So your cost of customer access reduces, the cost of transacting with customers reduces, the ability to underwrite customers improves. And if you assume that the cost burden comes down, then even lesser developed countries can get greater financial system penetration. So I really think there's only a positive. I don't see a negative at all.
I think that all countries that are now they are trying to make an improvement in terms of making it easier to do business, but also trying to make sure that at least the law and regulation are providing the right incentive for the companies to invest in those countries. It's not easy, to operate in not only different countries, but also in different tax law, regulations, and process. So that's something that at this point I would say is the most biggest challenges for us.
So I think the phase of ASEAN in terms of the smart cities, so really the cities, it will get more modern. I think cities are going to adapt to what the cities need to be in the future, so more sustainable, more environmentally friendly, less traffic jams. So there's still a lot of work to be done in the region, but I think there's going to be drastic change in the way cities are operated, and especially the way cities are powered over the years to come.
I think PPP projects, depending on the way they're structured, but if they address real public sector needs, particularly in transportation, in basic infrastructure that brings people more formally into the economy in an easier way, it becomes a very inclusive component and affects people from all walks of life, particularly lower income groups. You take, for example, a major transportation project in a major urban city. It's tough. It's tough for people in Southeast Asia to move around their major cities.
The Philippine economy is forecast to grow by almost 7% in 2019, making it the fastest growing among the ASEAN 5. And outside the region's biggest economies, Vietnam is on a similar course.
I have to say that I've now been involved with Vietnam for 20 odd years, and the shifts are quite clear. Moving from a complete command and control environment to letting the market forces and private capital play a role. So I think the shift is tangible. At the same time, they still have a long way to go. Because relative to many of the other more market-oriented economies in ASEAN, Vietnam can still be a little more difficult from a market standpoint to get things done.
You're scaling up your investments in renewables, for example, in Vietnam.
Right.
Why Vietnam? Why is it exciting?
They were offering interesting feed-in tariffs for investors to come in within a tight time frame. So you look at that and you say, I could put my capital here, I could put my capital there. If a government is suddenly very welcoming to you, then of course capital starts to move towards that. Vietnam has been very welcoming to specific projects in the renewable space. And it just so happened that in our particular case, we had built up expertise, a management team, and the financial ability to tackle those projects at this point in time. So we said, well, why not? You know, part of ASEAN. ASEAN is an exciting place, and Vietnam is being generous, I guess, with their investment offerings in that space. So we took advantage of it and moved quickly in that direction.
The major projects, I think what comes first into my mind is our investment in the petrochemical complex in the southern part of Vietnam, close to Ho Chi Minh City. That's roughly about 5.4 billion US dollars. Right now, we started the construction already. The project progress is roughly about 10%. We do expect that it's going to take another 3.5, 4 years before we can start the commercialization. That is supposedly the first petrochemical complex within Vietnam.
When you take a look at ASEAN, what do you deem as the biggest challenge for the region?
Well, let me start with the positive, right? Because the challenges come from these are all positive challenges because, you know, the region's really been doing so well, right? If you look at global growth, you know, Southeast Asia and Asia in general has really been a shining light, and I think will continue to be for a while. So the challenge really comes from how to make that growth sustainable and predictable and sort of, you know, continuing, I guess, over the medium and long term. There's some fascinating trends taking place. Urbanization is becoming massive, but with that come the challenges of the infrastructure needs of an urban environment. So that's a big challenge, and you can see it traveling through any major city in Southeast Asia.
In aviation, there's now about 1,800 aircrafts that are flying around Asia. Over the next 10 years, there will be 2,200 additional coming onto the market. So more than doubling. Power generation, the same. 260 megawatts today, gigawatt installed. Another 200 gigawatt to be ordered over the next 10 years. And healthcare, exactly the same. Healthcare has had a very steady growth over the last years, about 10%. There's thousands of hospitals that are planned, new hospitals across the region.
People are also more connected. You know, I think partly because of the technology that allow us to be able to move through and understand the difference in terms of the culture and language better. So I say that this is the most advance and improvement that I have seen between the countries within ASEAN for the last 4 to 5 years.
The one big difference is the proliferation of ASEAN brands. And I think that's a relatively new phenomena, whether it's AirAsia or whether it's Grab or whether it's Gojek, particularly in the technology-driven space. You're beginning to see ASEAN brands go around the space, and we didn't see a lot of those before. So that has been a shift. The second shift is, I think there is a desire and slow step but steady steps to integrating the markets. Certainly on the trade side, trade and services, there continues to be great progress. Tariffs are low, but even non-tariff barriers have been reducing. So integration has been increasing, brand proliferation has been happening. What needs to happen is greater capital market integration. What needs to happen is greater people integration. So mobility of labor, that's still a challenge.
Public policy and private enterprise, within borders and beyond. Power to the people, partnerships, and shared prosperity. From Manila, thanks for watching ASEAN, the Next Generation.